Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And a good afternoon. Welcome into Market Talk for this Wednesday, July 21st. Great to have you here with us as always. I am your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com. You can find all of our social media links there, all of our streaming sources, latest in market news, ag news, and more. It's all there. MarketTalkAg.com. Well, it's been a fairly choppy day of the grain markets here on this Wednesday. Not a ton of fireworks to look at, but still plenty to talk about. Let's bring in our good friend Mike Zuzolo, Global Commodity Analytics. Mike, good afternoon to you, sir. And, I would have to think maybe the last couple of days after Monday's stock market-induced sell-off, we saw the rebound yesterday, and then today we just kind of chopped around, maybe a little bit of a breather for traders, I should say.
Yeah, and I think the Monday sell-off really was, I think for the supply-demand bull and bear, a real wake-up call to give you kind of a clinic, Jesse, of how powerful the macro markets are in our ag sector. And, I spent some time on this with my video this week to clients and subscribers, saying pretty simply and oversimplifying it probably too much, but to get the point across that we had a dollar bump thanks to emerging market scares, thanks to the COVID being put back into the headlines and lockdowns coming back on in Europe and Asia. Now we're talking about it here in the United States. And you could almost see this type of scenario coming if we weren't going to get the COVID under wraps by the time we got to the July 4th holiday. And I think that's where the trade really, in terms of the supply-demand bull and bear, the micro-fundamental bull and bear, and the trader and hedger really has to get underneath this market and understand that the dollar, the emerging markets really have strong pulses that they can work through the energy markets, and that energy market can then really work hard and knock around the agricultural sector, even with bullish news out there. And we had big bullish news Friday, in my opinion anyway, when we heard that at least two large commercial end users in Brazil were not going to be able to sell corn out of Brazil, out of the Paranagua port. That's one of the things you and I have been talking about, that port price a lot lately. And then the second thing that happened, obviously, was over the weekend when we came in with a hot dome, that Rocky Mountain, Western States dome, moving of ridge of high pressure into the central part of the country. I told clients earlier in the week, in my opinion, just those two factors alone should have given us a 50 or 60 cent rally in the corn. Why is that? And this is the unresolved aspect of, to me, this week's program. It's still an issue of July futures and where it expired. Cash corn in the interior being $6.50 to $6.80 a bushel, at the Gulf of Mexico being well north of $7 a bushel, and yet we've got September corn stuck at $5.60, $5.70. This is still an unresolved issue that we're going to have to figure out in this market, which price is right. And I continue to say to you and to others that I really think that it's about the end users coming off the sidelines and buying this market, buying it outright out of fear because of the weather, out of lack of substitutable supplies like the wheat, but they haven't moved yet. And in fact, before we went on the air, I took a look at some of the hard red wheat prices south of me in feedlot country like Goodland, Kansas. That price of hard red wheat has sunk 60 cents against lead month corn in the last month. And so hard red wheat right now is $1.09 cheaper in terms of physical hard red wheat than physical corn. And so you're not going to get that end user to move back to corn as long as that wheat market and the cash side of the equation really starts to keep track with the feed grain side.
You brought up those prices, port prices for corn and more, and I know you got a chart on that. And let's pull this up to look at this a little bit as we continue that corn discussion, Mike, because today corn was just fairly choppy on the board. I mean, I don't think anybody could get real too excited about the action we saw today on the futures side. But diving deeper into this, I think a lot of where we're at with the corn market right now is waiting to see, how much the bat in the West is going to be offset by the good in the East and the South. And I think we're just kind of at that point where we're almost in a little bit of a wait and see here for a couple of weeks, Mike.
Yeah, I really think so too. And I think this is where, if I look at all the factors, macro and micro together, I still feel as though the green line, the FOB price of cash corn at the Gulf of Mexico that doesn't have a lot of shipping involved in it, just over $7 seems to be an accurate price, because you can go to Cincinnati, you can go to ethanol producers in Indiana and Ohio and in Illinois, and even out west in Davenport, Iowa, the river, they're in the sixes and almost at $7. And so I think the cash market is that tight. I think that's a true number. And then when I throw on top of it some fresh news out of China about some unbelievable historic 1 in 1,000 years type flooding we're getting news out of just this week in an area, in a province of China that produces about 10% of their agricultural production. And then you throw on top of that what you just talked about, Jesse, the northern plains. I mean, when I saw 63% very poor in spring wheat conditions, and I saw that if you look at corn and beans, good to excellent conditions in North Dakota, we're in the 20s. In South Dakota, we're in the 30s. In Minnesota, we're in the 40s. Look, those three states are about 20% to 23% of the production of the planted acres of the corn and soybeans. And so that cash market, I think, really does justify being up there in that $7 level. And so I think you're right on the money. And I think this is where the ridge comes into play as we get to the end of this week. Some of the models are breaking the ridge down as we get past the weekend. Some of the models are still keeping it very dry for the next 7 days. And by next Wednesday, we're having areas of South Dakota and southern Minnesota top 100 degrees. So it's still going to be mainly a weather market that takes us higher. I think the biggest thing that maybe is starting to come together a little bit better is the trade is starting to understand, and hedgers that I work with are starting to understand that these markets can have big down moves because of those outside market variables.
Well, Mike, let's continue on the wheat side here quick, since we were talking about that in the corn discussion there. And, spring wheat, I know next week Wheat Quality Council has their North Dakota tour of spring wheat Durham. I believe that starts early next week. So I feel like that's going to be a little bit of a confirmation of just how tough that spring wheat crop is up there in the northern plains. And we have heard a lot about the Canadian prairies, but you look at the market today, bit of a correction, it seemed, this overbought market, but still very good prices. And then you look at the winter wheats, you look at Chicago, KC, had good strength today. What are you seeing with this wheat market, and especially that spread between KC and Minneapolis wheat?
Yeah, I'm really glad you brought that up, because the spring wheat, I think on Wednesday's trade, if you look at the two big leaders to the downside, it was soybean oil and it was the spring wheat markets. And I think that's really the northern plains weather. We got a shot of rain on the night of the 19th in key areas of North Dakota. The Grand Forks Herald, I think it was, had a really good article out on Wednesday talking about what happened, and they had some North Dakota State people interviewed in that, and they're matching up with what you and I have been talking about. Number one, it is a failure at this point. In fact, there were some people talking about in that article that many of the people that this person from North Dakota State was talking to is saying this is along the lines of 1988. You and I have been talking about 2012. 1988 just blows me out of the water if it's that bad. And I think that tour is really going to help isolate and put a point on how bad is. Is that 63% very poor? Does that mean you're talking about not even going into the fields at this point? And so that means almost 70% of the crop is not even going to be combined. The trade does not have any clue to that being a possibility at this point, in my opinion. I think this chart shows that, Jesse. The other thing that I'd point out on this chart is we have had what I was hoping we'd have, where the spring wheat pulls up the hard red, pulls up the soft red, two crops that have had above average, if not record-breaking yields. Soft red wheat, clients continue to call me in Illinois and Indiana, and they're busting 100 bushels on their soft red wheat in terms of yields as they get ready to finish up their harvest at this stage. So I want that spring wheat to pull those other two up, because I want to get the rest of my 21 hedges done here. Probably by the end of August would be the timeline I'd be looking at, with that crop tour being a big issue as far as whether the spring wheat can carry us on up another leg or not.
Well, and I'd have to think as well with spring wheat, closing just below $9 today. We did see some of that correction, but If that tour can confirm some of that, in my gut, I'm thinking $10 plus spring wheat
Yeah,
possible.
yeah, exactly. And I think this is where it goes back to what we saw in 2012 and 2013 and 2011. That's when we were in the 12, 13, $14 region. So $10 is not a hard number to come up with. I don't think you're being aggressive at all at that point. If we're literally talking about an 88 style or a 2012 style drought at this stage of the game. And keep in mind, it wasn't long ago that the good to excellent ratings for the spring wheat crop in this country was near 80%. And that's what's so neat
Mhm.
about the USDA charts is we've completely flipped this crop upside down to where we had 70, 80% good to excellent until about 2.5 months ago. Now it's almost 70% very poor. We don't even know what that means yet.
I know you mentioned bean oil today, and canola, I think, had a little bit to do with that bean oil market. And that, again, goes back to the Northern Plains, Canadian prairies weather. But let's talk this soybean complex a little bit. And bean futures themselves were fairly mixed today. November beans, Novi beans still finished up 1.25 today. But looking at this soybean market, and I know you've talked a lot about the pork and bean trade, Mike,
Mhm.
and I want to bring up this chart that you have as well, to kind of wrap this into our discussion. But overall, this soybean market today, like you said, hit by bean oil, but still kind of hanging in there. I think soybeans are still trying to find a little bit of direction and just trying to decide how much, again, west versus east and good versus bad.
Yeah, I think you're right. And I think this is where the soybean oil has been the real driver of the soybean rally. And that is very similar to 2008, 2009. I would really like it. And I think it's very possible now that the soy meal market could come in and bring in some support to the soybeans as we go through what will be the weather time period for the soybeans the next 30 days. I don't think we're at a 50 bushel yield yet nationally, given the weather pattern that we're in right now and the weather pattern we've had all the way since spring. I still have more clients calling me more worried about their beans than worried about their corn in terms of yield potential, Jesse. But this pork and bean trade, this chart, which just shows lead month hogs against lead month soybeans, it's just a great visual because I talk about correlations and how strong the relationship between the two are, running almost 70% positive relationship over the course of the last 12 or 18 weeks. And it's been doing that for almost all of 2021. Well, this is just a great way to look at it. Instead of talking fancy talk, you just see how the funds really do have a strong suit and a strong hand of cards when it comes to what they can do in these markets. And they've got their own fundamentals, but they also have jointed fundamentals. And that goes back to the vegetable oil market, the pork demand out of China. It's essentially, in my opinion, this spread and these two complexes together is essentially your food bullishness spread. And that's why I like it so much, is when they're both going up, I think the market in general, the inflation bull, the food demand bull, has got a lot more control and play in the markets. You start to worry, or I'll start to worry, when this thing starts to break apart and one goes up and the other one starts to go down on a trending basis.
Well, Mike, as well here, I wanted to get your thoughts on this. And I know you have a lot of clients in the Eastern Midwest, and I've heard some thoughts and or some rumors, I should say, about disease pressure of beans in the Eastern Midwest with all the rain. And even some folks in Indiana, agronomists saying, don't spray this field. It's not worth it. Spray this field. It is worth it, that kind of thing. And I wonder how that could correlate into this bean market overall. We already have heat and dryness issues in the West. Start talking some disease pressure in the east, tight stocks. It feels like there's a lot of room for soybeans to have some bullish momentum if all this keeps up. But then again, I look at our prices, and it seems like every time we get past $14 or so in lead month futures, we start to struggle a little bit, Mike.
Yeah, and this is the world supplies coming on. I mean, we've seen the transfer from China buying our beans to Brazilian beans. The recent Chinese data came out earlier this week and shows that very clearly. We're no longer the buyer of choice. We're the seller of choice. We're the second tier seller when it comes to Brazil. And that's not going to change because the Brazilians do have an ample supply. Having said that, though, I think that our prices can drive the Brazilian prices higher, and that may create an environment where the Chinese feel like they need to get more on the water, more shipped out before the another leg up in the beans may happen. They sometimes do that, and we don't know that until after the fact, but that's kind of their footprint, if you will. I think what you bring up about the eastern and central corn and bean belt, Jesse, is very timely. I actually just committed a few days ago to take Friday jump in the car, go see my mother-in-law, and take a look at the Indiana-Illinois border, take one route on the north end going east, and then come back through St. Louis on Sunday and essentially do a central corn belt and bean belt crop tour, because this is the area that's going to make or break our national yield, if you ask me. I don't think you're going to get much better than average out of the droughty areas of the Western Corn Belt. So that leaves Nebraska and Kansas, which I can cover that fairly well in my backyard. But really, Illinois, Indiana, and Missouri, I think are going to decide whether we really have an above trendline yield in this country right now or not, because these rains have literally done more harm than good based upon what producers are telling you and telling me as well. So I'll be sending out a lot of stuff here during the weekend, and then I'll do a big write-up early next week. And so we'll be able to talk a lot about that next week.
Definitely. Well, Mike, I know looking over the livestock side here today, some good action there with the choppiness in grains, it seemed. We did okay, cattle and hogs. I know you and I talk a lot about retail demand for beef and pork at the grocery store and at restaurants. And obviously, with COVID coming back into the forefront here once again, one has to wonder how that's going to affect retail demand and restaurant demand. But overall, starting with cattle, what are you seeing with this cattle market here as we work through this week?
Yeah, I think a couple things. You and I talked, I think, last week about whether this market was current or not. And I've been a bit of a contrarian with the drought, with the dressed weights going down, and with producer ranchers telling me that the buyers are pretty active right now. I feel as though we're very current in this market. And so that was this past week. And when we came back in Monday, Tuesday, started to find out that, yeah, we are a lot more current than we thought. And we're needing to chase now cattle for market-ready supplies, and that's a really good spot to be in. Second thing I would say that's really helping this market is we're getting some earnings out from restaurants, major fast casual chains that really can drive the meat market at the restaurant level. I'm still worried about the grocery stores and the prices going up and the availability of certain cuts. But at the restaurants, you couldn't ask for a better market right now. Chipotle, for instance, came out. They had their best earnings for the second quarter since 2015. I think they were up almost 25%. And a lot of that does go back to menu prices going up and also just outright foot traffic coming back into those restaurants. And so that's a real bump, I think, to keep the consumption very strong for beef going into the third quarter. Now, as we get into the late third quarter, early fourth quarter, I really do start to get concerned about the grocery store demand being hit by the menu price or food price higher increases, and then the menu prices going up as well. And I'm still on that issue at this stage, Jesse, that I want to hedge cattle for the third and fourth quarter at the right price, at overvalued levels. And this COVID issue just makes me more solid in that mindset. I'm not going to screw up a good thing by locking in good profit, i.e., if I can get August cattle up to $124, if I can get those back in April fat cattle up to 140, 142, I think those are great selling opportunities and great hedges and a good position to put yourself in, because you don't know what kind of lockdowns we're going to face as we gear up for the school starting to open in just less than a month at this stage of the game. And if we go back to online learning again, and we don't have cafeterias open, and we have an Olympics that, just goes poorly, so on and so forth, that taste and preference consumption pattern can be changed by things like that.
And on the hog side, we're talking another disease, African swine fever. More concerns with that in China, Germany here last week, coming out late in the week with concerns there. And you mentioned the flooding in China as well, and I know that's affecting a lot of agriculture there. And hogs have seemingly been fairly solid on this news. We haven't seen a skyrocket, but solid. What are your thoughts on the hog market?
Yeah, I think you nailed it there. We didn't see a big, massive break to the downside with funds long and negative fundamentals coming in from about every direction as we got into the late part of the week, especially the German news of the commercial inventories having some ASF. And so that really helped solidify the hog complex. And I think we'll have to go through another week here, just in another 24 hours or so since we're taping. We're going to have to go through another week of weekly export sales. I would be disappointed, and I'd start to worry about that support holding up in hogs if we had another bad week in pork export sales. So that's probably the thing I'm looking at most in the short term when it comes to the hogs. But the cutouts are remaining very, very firm, and I think in part because cattle are very current. Those meats, I think they're tending to help each other at this point. keep each other supported, because there are, tighter and tighter supplies of each in the categories that the consumers want.
Mike, a lot of great information today, as always. Any other final thoughts or anything you want to reiterate for us?
We talked about the dollar last week, Jesse. We talked about that from a standpoint of it being a great gauge as far as the inflation bull, the inflation bear. I think that's a real good indicator again in this next week. We got up to the highest level since early April in the dollar index. That did a lot of damage in terms of psychology in the trade, and it really hit the sell signal and the sell button for the crude oil market. But we're starting to see a little bit of pushback with the crude oil and the energies coming back around. The dollar may be topping out a little bit here. I'd like to think that maybe we can get some tailwinds in these macro markets right when we get into the drought scenario in this dome of high pressure. But make no mistake about it, I still think this is a weather supply driven market. So scale up, sell, lock in profits.
Mike, I know if folks need a little help or want to follow along with all your great insight and research, they can do that. globalcomresearch.com, and you got that free trial they could sign up for, don't you?
That's exactly right. And I hope to look forward to talking to you again next week, Jesse.
Sounds great. Mike, appreciate the time as always. Thank you, sir. We'll talk to you soon.
Thank you.
Mike Zuzolo with Global Commodity Analytics. Find him online, globalcomresearch.com. This has been Market Talk for Wednesday, July 21st, brought to you by Growmark FS. I'm your host, Jesse Allen. Have a great afternoon.